Tech Trends 24/7 Leaders is a passionate podcast hosted by James P. Quinn on technology innovation. It provides insightful interviews with key and inspiring innovators in areas of corporate technology, office of the future, AI, real estate, sustainability, assistive technologies, and other emerging technologies. Tech Trends 24/7 Leaders will smartly position you where your business, life, and industries are moving for the future.
On today's episode, we are excited to have Mike Hochanadel on the podcast. Mike is a driving force in data center capital markets and is the managing director and head of all digital assets at Harrison Street. He brings 21 years of industry experience and is responsible for leading Harrison Street's digital business and defining strategy for their digital sector. Prior to Harrison Street, Mike was with JLL for 15 years where he focused on the data center asset class. Welcome, Mike.
Mike, great to have you back on the podcast. Great seeing you. Hope all is well. And really, it's a great way to start the year, really looking in 2025. So welcome.
Thanks, Jim. Love being here. Love listening to your content. Love being a part of it. Things are moving so rapidly in our sector that one year goes by and it seems like we've got to update all of our thinking about the direction of the market. So it's good to connect here at the start of the year.
Absolutely. Mike, why don't we jump in terms of, maybe could you start out giving us an update in terms of all your activities at Harrison and with American Real Estate Partners, 1547, Summit IG. You guys have been so active to really understand what the latest is.
Yeah, so I think big picture, a lot of those pieces are the same and relatively consistent relative to the conversation that we had last year at this point. We have 5 operating partners broadly across the sector. Those groups are, a couple of them are the groups that you just mentioned, 1547. With 1547, what we are executing a strategy largely oriented around interconnection and connectivity-oriented co-location, obviously some of those assets well. Across our development activities, we have several partners where we're doing kind of campus scale development, mostly in service of the hyperscale community. So the most substantial in terms of kind of the market exposure is American Real Estate Partners and their data center division, Powerhouse. With Powerhouse, we've been on a very successful and aggressive run of aggregating some really interesting sites across markets and now executing build-to-suit leases at many of those locations. You'll probably see more from us collectively in 2025. Opidin is another group. We're executing a similar strategy for, again, across markets, generally going into sites, typically at the direction of some key clients. And then Lincoln Property Company had a very successful round trip investment with Lincoln at our campus in Central Ohio and looking to do more similar things with Lincoln. They've recently retooled their data center team a little bit, brought back a gentleman who I think we both know quite well, Ryan Sullivan.
Yes.
And who's now leading their efforts, and expect to see some great things from Lincoln here in the year. And then Summit, a wholly different animal and different style of investment for us, but we're an owner in the platform Summit Infrastructure Group, which is the dominant dark fiber provider in Northern Virginia. And one of the cool things about what that company is now doing and has been able to do, really predicated on the success that they've had in Northern Virginia, is really building on that success and opening up other markets, typically on behalf of some of their core customers. They've expanded out of Northern Virginia with network in Central Ohio, Chicago, and starting to explore some other markets as well. I think all in at this point in time, we've committed about $5.5 billion to the sector, pretty much all of which has happened since I joined the firm in the summer of 2020. So it's been a fun run, and we want to continue the momentum. We've got some more to do, but the strategy's sound, the partners are in place, and obviously the market tailwinds are there as we will.
No, congratulations. It's phenomenal progress we're really talking 4-year period, which is fantastic. Mike, in terms of power, we're seeing a lot of fits and starts with it, obviously, like everybody else. A traditional developer has a piece of land. Then they think that they might strike gold because there could be a lot of power there. And some people are marketing it. And then when you really drill down on it, it's not what the power you think it is. Just want to understand like what the strategy's been for power for you guys, because it's such an important area and it's just getting more each year.
Yep. Yeah. So it's evolving rapidly. When we replay this conversation at the end of this year, I'm sure there will have been some material changes, evolutions to the marketplace in this regard. But I would say if you really take a step back and look at it, it's all the conversations around power are all predicated on just the profound nature of the underlying demand and the sort of order of magnitude growth in terms of the kind of power size ranges that the customers are looking for. When we're talking to customers now and they're looking at new campus locations, the conversations are around power availability in kind of the 300 to 500 megawatt range. 4, 5, 6 years ago, customers just were not thinking in terms of that magnitude of power, right? So it's been a total paradigm shift in terms of how companies think about it. And there are a lot of reasons why that's the case. Part of it is just the continued growth and success of cloud and the amount of compute that's residing in the cloud at this point in time. Obviously, you can't have this conversation without mentioning AI. AI has been a massive accelerant in terms of the overall demand profile. And then the underlying equipment is able to operate at much higher densities, which is driving this dynamic as well. If you just start there and think about it from a demand perspective, and then aggregate all of that demand and look at the impacts on the power grid, what tends to happen is in the locations where all of these end users focus and tend to cluster, there ends up being effectively a run on the power. Some of that demand coming from real, actual end users and customers. Some of it is phantom demand coming from developers and land speculators just trying to get in the middle of it. And we've seen, I guess, the impact has been in a couple of key ways. I think it's definitely changed our thinking around how we diligence sites. And as part of that, how we engage with utility providers. And then I would say it's different from jurisdiction to jurisdiction. The other impact is it's changed how utility providers think about making commitments to developers. And in a lot of ways, I actually think this is a good thing. I think it creates some real barriers to entry and creates a market dynamic where to really be a credible player developing hyperscale campuses, you really have to have the knowledge and understanding, financial resources, and development capabilities to credibly engage with utility providers and allow them to support the commitments that we're looking for. So, and then I think beyond that, the impact has been on market selection and site selection. Obviously, we're looking to effectively skate to where the puck is going as far as where we see the confluence of both power availability in locations that support a diversity of use cases. And then there are some requirements out there as well that are just going to anywhere where the power is. In general, those are reserved for kind of AI training workloads, which we find is a little bit trickier just from an investment perspective because it's so binary. But that's big picture what we're seeing out there in the marketplace.
Yeah, I like in terms of what you said also. I think the utilities are also getting smarter and putting certain guardrails up just because they were overwhelmed with so many applications and half of them really probably weren't going to go through. So I think that's bringing some discipline in the process is good for everybody.
For sure. And again, it eliminates the prospect of land speculators who really don't have the capabilities to deliver from getting in the queue and just looking to flip land.
Definitely. And then you mentioned AI and some other trends. What are you seeing now, Mike, that we're early in the new year that's going to be prevalent going forward for 2025?
Yeah, I think we're still in the very, very early innings in terms of how AI will actually impact the marketplace. The impacts that we've seen so far are larger deployments, more locations are suitable for certain workloads. I would say that the conventional thinking around distances to cloud clusters has expanded.
Mhm.
Power densities have increased substantially. There are a couple of kind of competing visions for cooling technology that are out there that will be, I think, probably settled a bit in the coming year or two. But if you think about I mean, we're not even at a point yet where it's broadly adopted, right? So the impacts that we're seeing right now are really the training data and kind of training the LLMs. And those workloads will continue. It's possible that they even become, more substantial as more parameters get added to the models and more groups are out there, competing in the sector. But what we're not really seeing broadly adopting yet is the inference piece, which is the portion of the compute that supports the interface with the end user community. I can envision a world where rather than ever going to do a Google search, you're asking your AI assistant. And
Exactly right.
that may sound like a very de minimis change, but the compute implications of that are enormous. So if it takes 1 unit of compute to support a Google search, it's 10 to 20 units of compute to support that interaction with an AI assistant.
Yes.
And so when you see that become broadly adopted across the market and new use cases emerge for AI, the implications on the data center market could be even more profound than any of us are considering, which is hard to believe because you hear these crazy numbers thrown out there, but I think there's some really sound and strong underlying support for it. And so then the other big trend that I would say to pay attention to is various forms of on-site generation or just distributed generation in general. There are some really interesting technologies emerging now to do on-site generation, typically still with natural gas as the input, but some technologies now that can produce in a much more modular fashion with much lower emissions than historic technologies. And so I do think you'll start to see that proliferate, and you'll start to see some companies emerge with kind of broadly accepted technical solutions for that sort of on-site generation. And then I think longer term, this won't be something that is immediately impacting the market, but you'll see nuclear proliferate, both large scale, grid scale generation, as well as the emergence of more modular generation, SMRs, or whatever the case may be. The barriers to doing that quickly and comprehensively historically have been really just regulatory. The technology is there and available. And so I think that as it's gaining more mainstream support and increasingly the conversations you hear about nuclear are very different now than they were even 18 months ago. And so I think that that's going to help to chip away at some of the regulatory barriers. And so I think this will be a key year where we start to see some headway made in deployment of significant power generation across the nuclear dimension.
Yeah, totally agree. And I think one of the things you mentioned in terms of like the new way of incorporating AI into your business life now, in terms of we do a lot of research on AI agents and how prolific they're going to be and how helpful they're going to be. You're right. We never thought the demand could increase, but with really a whole slew of AI agents that can really contribute to the continued demand for sure.
For sure.
Yeah.
And if I'm sure most of the audience is already doing this, but if you play around with some of the latest models, ChatGPT is the one that I use the most. And now they have an audio interface.
Yes.
And it's just shocking how good it's gotten in such a short period of time, to the point that, I mean, you can have meaningful and robust conversations in real time, and the content that you get back is insightful. It's generally factually accurate.
Yeah.
And it's robust. It'll be fun to watch how that plays out this year.
It's like Tony Stark back in the day, right?
Exactly. Yeah.
Mike, you guys have been very active in terms of the data center investment market. What are the lessons learned in the next 12 months since we last talked? What are you seeing? Why do you look at the investment market right now?
Yeah, you still have to start with just capital markets generally, interest rates and cost of capital. I think it was probably a more substantial portion of the last conversation that we had. We have started to see a little bit of relief on the rate side, although rates have ticked up again recently and in a somewhat stubborn way. So across any asset class, that's obviously going to impact capital pricing, and our the market is no different. But at the end of the day, most of what we're doing is oriented around spread, and we've seen the spreads hold. So build yields, as far as rent constant versus exit cap rate, we're still able to accomplish something in the neighborhood of a couple hundred basis points, depending on the risk profile. And so that's the important piece, I think. And the build yields are really a function of underlying demand fundamentals and just the recognition that the product is a requirement for the end user. And so you're able to structure and set that build yield at an appropriate level. I do think we'll see some continued relief on the rate side, but I'm not sure that we'll ever get back, at least not in the near term, to the artificially low rates that we saw coming out of COVID. And that's fine. I think that's probably healthier. But what it does make it a little bit more straightforward right now to underwrite development versus acquisition. That was a theme last year, and that seems to be persisting this year. And it's really just a function of the fact that it's ideally, when you're going into an investment, you want to be able to underwrite to at least neutral leverage, and given where rates are, that can be a little bit challenging right now. Yeah, so I would say that those are the big themes. Beyond that, I would say it's really around scale to be successful and relevant and a credible counterparty, given the size of the deals and the sophistication of the end users, just requires an enormous amount of capital. We have a variety of development projects going on right now, and one development can easily be $1 billion of total cost.
Yeah.
And when you think through that, obviously the financing markets are efficient for this asset class for development, but it still ends up being a very significant amount of equity required. The returns are interesting, and it's a process of constantly being out there aggregating capital to be able to take advantage of the market opportunity. So those are the things that that we're thinking about and spending time on. I would say that the other thing that we think a lot about is basis. When you're spending time focused on uncovering interesting, actionable land sites with power, you get to a spot where the basis becomes sort of untethered from reality. In a perfect world, we're targeting land where we can make sense of the basis across a range of potential use cases. But in certain circumstances, that's hard to do with some of the premiums that you see for actionable near-term powered sites. And and there are certain markets like Northern Virginia where it's just very obvious that the highest and best use is data center. And so some of the land values that you see for those sites is beyond what would make sense across other use cases. But we do still focus a lot on basis.
Yeah, that makes sense. And then, Mike, in 2024, was it harder to find deals and execute deals? And how do you think it is going into this year? Do you think it's going to be the same or maybe easier? Just like to get your thoughts on that.
Yeah, I mean, it's never easy. And I would say largely because it's competitive. But I do think from that perspective, as we started out, I think you're starting to see a narrowing of kind of the credible developer players operating in the space. And so I think from that perspective, theoretically, maybe it's a little bit easier to kind of win your share in 25. I think one of the challenges that we see out there, though, is just the amount of land sites that are floating around out there that people are positioning as interesting data center projects. Some potentially are, but many are not. So it's really just a function of sifting through a lot of stuff and trying to make a determination as to what's really interesting or not. And beyond power, all of the other factors are still important. Connectivity probably being most notable among them, but you still need to be within a reasonable radius of existing availability zones or kind of end user, eyeballs. And then water is increasingly important, and the impact on the surrounding community as well. So there's a lot out there that we're constantly looking at. And then I would say the other thing, we spend a lot of time trying to find the right entry point for Europe as well. And the Europe market's incredibly fragmented and even probably more power constrained than the US market. While it's a primary focus for the firm and it's something that we expect to do this year, I wouldn't say that's an easily investable market.
Yeah, I think you're right. It is a very fragmented market for sure. And talking about markets, with the work that we're doing, is that we're really constantly looking for emerging markets. Where's really the next frontier going to be? And just like to get your thoughts on emerging markets and what are you seeing from your window pane?
Yeah. I 100% agree with that, by the way. As we think about our kind of investment strategy and site selection parameters, it's really three buckets. It's creating actionable sites in core markets, which if you can do is great. Obviously, it's increasingly hard to do, as you know. But I think you've spent some time on some of that in the northern New Jersey market for sure. So that's one. I think the second is like the path of growth out of those primary markets. And so those are locations where we see a large established market expanding into surrounding regions. There are quite a few areas in Northern Virginia, we see that. And then the third category is, as you point out, is like the newly emerging cluster markets that are growing out of secondary markets or just are, for a variety of reasons, emerging de facto greenfield. And we made the investment successfully in New Albany with Lincoln. That market turned into a primary market seemingly overnight, right? It was very much a secondary market. There were a couple of hyperscale deployments there. And then fast forward 12 to 18 months, and everybody's there, both operators and hyperscalers and multiple availability zones, new network providers, to the point that it quickly became a constrained market. Yeah, that's one of the interesting nuances when you look at some of these secondary markets is the utility providers are operating off of a smaller base, and you get 10, a dozen, 20 campuses, each at 300 megawatts. And then they're all of a sudden, hey, that's more than we have in the entire system. So I think you'll see more of them emerge, probably none getting to the level of significance of Northern Virginia or even Dallas and Chicago and Atlanta. But the other ones that we pay attention to, I mean, we've looked at Charlotte. You've seen some big commitments to Charlotte. I think that's one where the demand is clearly going there. I think Duke makes it a little bit tricky in terms of how you engage with them for power, but clearly that's emerging as one. Louisville is a market that we've heard about in that regard. Nashville, Memphis, and just some of those other markets in that mid-Atlantic region. Obviously, all the markets across the I-80 corridor, many of which have already become, fairly notable destinations. But on the western end of that, starting to see some pickup in Cheyenne. We've got some things in Cheyenne, and we're seeing that market grow substantially. And then historically, Denver has always been more of a connectivity market. You're now starting to see some people think about that market a little bit differently. We actually have a large site in Denver that we're working through the power procurement process on. Salt Lake City obviously has already become a very significant destination market in the West. We're very bullish on Reno. We have our site in Reno. I think that's a market where it's emerging as just a much easier place to do business and still cater to a lot of the workloads that generally reside in the Bay Area. I would say similar to the relationship between kind of Phoenix and Southern California. And then one of the markets that I've been paying attention to which is interesting. If you just look at a map and look at clustered activity around markets based on power availability, population density, and network, the one that you don't see any is St. Louis. And that makes no sense to me. And there are some things that we're looking at in St. Louis. I think in 25, you'll start to see that market activated, particularly on the kind of western side within that corridor that runs to Kansas City. But at the end of the day, the ingredients that we're looking for are, access to power, a large enough contiguous land site that you can probably plan 3 buildings with some level of expansion over time. Obviously, network, water, and proximity to a reasonable population center. So anyway, and those are the markets. And then we're not super active in this space, but you are starting to hear about these more remote locations where operators, developers, users to some extent are just going to where power is.
Power is right, exactly.
That's like the Dakotas or West Texas. But again, I think those are a little bit trickier from a real estate investment standpoint.
Agreed. No, that's a great snapshot on emerging markets, Mike. Thank you. And this is always informative. Before I let you go, we know you're super busy. You wanted to get any good book recommendations you have coming into the new year? Anything you recently read?
Yeah, so I just started it, and I just got to make sure I get the name right. Yeah, so I just started it. I have not finished it yet, but Nexus by Yuval Noah Harari.
Okay.
He is a really interesting storyteller with sort of an interesting take on things. And part of the way that he explains the world is just through narrative and through collective storytelling. But the focus of this particular book is the current moment. With that as the backdrop, the current moment as we approach this inflection point with AI and whatnot. So it's an interesting book relative to the work that we do. Again, I'm a chapter in, but looking forward to finishing that one.
I did not hear that one, so thank you. I think that could be, I'm going to get it myself. No, excellent. Mike, as always, thank you. Great connecting as always, and we appreciate your time.
Absolutely, Jim. Love to do it. Look forward to our next one, and sorry that I'll miss you out in Hawaii.
Definitely. Thanks, Mike. Take care.
We hope you enjoyed this episode of Tech Trends 24/7 Leaders. To learn more about technology trends, you can follow me on LinkedIn. You can also read my book, Tech Trends 24/7 and the Impact of COVID-19, which is rated a must-read book by CIO Insight. The book is available for purchase on Amazon or on our website, Tech Trends 24/7. When conducting research for the book, I was inspired to see how technology innovation was making a positive difference in people's lives. As a result, in 2020, I founded Beacon of Hope 365. Our mission is to leverage technology to help people in need. More information on the charity can be found on beaconofhope365.org. Thanks again for tuning into this episode, and a big thank you to my entire podcast team, Peyton Pellington, Sal Fortuna, and Carmela Petrone. See you on the next episode.